Hello, my name is Steve Bigelow with the Candlestick Forum. One of the questions we get quite often is when to take profits. There's some very logical explanations for how the candlestick charts will allow you to take advantage of when the investor sentiment is starting to change. There's 5 ways to detect when it's starting to become time to sell or take profits. The sell signals, gap ups in the overbought condition, the distance away from the T-line, putting in safety stops at levels where they shouldn't be trading if you're in an uptrend, and most importantly, the formations, the candlestick patterns, signals, allow you to start anticipating when investor sentiment is about to change. We saw that in the Dow this past week. Look how it gapped up in the overbought condition. That's when you start looking for profit taking. When they gapped up in the overbought condition and reversed it, that's when it was time to take profits. So your major sell signals are just as easy to learn as the candlestick buy signals. And we can use a combination of the candlestick signals, allowing us to see there's a change of investor sentiment coming so that you have much better perspective on anticipating when a price move is about to change. A candlestick signal such as the hanging man, we saw that in the NASDAQ on Wednesday, made it very simple. It was a hanging man doji. Very simple rule for a hanging man. If it opens lower the next day, start taking profits. Doji rule. Price is usually going to move in the direction of how they open after a doji. When we woke up and saw the pre-market futures were going to trade lower, that was a good stimulus for start taking profits of charts that hadn't shown exact sell signals yet. For example, look at Apple gapping up in the overbought condition away from the T-line, and the markets were starting to sell off. This was an area where you could easily say, well, they've gapped it up here, exuberance in the overbought area. Let's start taking profits. Amazon, same scenario. They gapped it up, and then you could see the markets immediately selling off. That was a good time to take off at least half the position of your position. The next day when it opened lower, you could take off the other half and be at least satisfied that you got approximately this level as your profits. NVIDIA, when they gap up that far away from the T-line and immediately start selling off, start taking some off the table. This is nothing more than taking the information that the Japanese rice traders have provided us for hundreds of years on what human emotions normally do. Once you understand that, now you're in control of your trading versus being reactionary to your trading. On September 26th, we're going to be doing a full day training on how to take your emotions out of your trading. This is what allows you to be, again, proactive for getting in and out of positions versus reactive. That'll be it. We'll see you in the chat rooms.